Do a strategic rollout from IRAs and 401ks 5 years before retiring. In this educational episode, I'm going to address how to convert to tax-free income during your retirement. Get ready. This could save you $250,000, $500,000, maybe even $1.2 million of unnecessary tax like we did for a husband and wife. So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for north of 48 years. And for that nearly 5 decades, I've been very passionate about helping people optimize their assets and minimize taxes and empower what I call their authentic wealth, but helping people to make sure they do not outlive their money. As a financial strategist, I've noticed that there are 3 big dangers that cause most retirees to outlive their money. Taxes, because they thought they were going to be in a lower tax bracket when they retired, and most people are not if they're savers. Number 2, inflation. And inflation erodes away the purchasing power of the dollars they have saved, so that retirees oftentimes will have to have twice as much money every 5 to 10 years in income to buy the same gallons of gas and loaves of bread that they were buying, just 5-10 years earlier at the current rates of inflation, which are now 7-10% and even greater. So taxes, inflation. The third big danger is market volatility. So what I have done for 5 decades is help people make themselves immune and their retirement funds immune from those 3 dangers: taxes, inflation, and market volatility. We do that by using one of my favorite financial instruments, which I call the LASERFund. A LASERfund is simply a max-funded indexed universal life insurance contract, but it has to be structured correctly and funded properly in order to perform the way that I talk about on this channel, to where if you earn 9%, you're netting 8. If you earn 11, you're netting 10. If some years you earn 25, you're netting 24 over the life of the contract. And very few advisors, unfortunately, know how to structure them correctly to do that. And so this is about you and your brighter future. When people would come to me as a retirement planning specialist, many times I would look at the value in their IRAs and 401ks, and I would go, oh my heavens, were you planning your retirement or Uncle Sam's? Because they would have 80-90% or more of their retirement nest egg invested where? In yet to be taxed IRAs and 401ks, usually invested in the market. And I would go, what are you thinking? Okay. Wall Street was not ever designed or built to create income. If you ever ask Wall Street, when's the best time to sell my stocks or liquidate my mutual fund shares, they will say, never. Okay. That's why most broker-dealers forbid their advisors from showing retirees a predictable income stream out of their mutual funds or out of the stock market. If they do illustrate anything, it's called the 4% rule. On every $1 million you've saved, they only want you to pull out $40,000 a year, because Dalbar, who studies investor behavior, says the average retiree is only really earning about 3.5% on their mutual fund portfolios. That's pretty pathetic. If you're pulling out 4% and you're only earning an average of 3.5%, because people buy and sell at the wrong times, you're slowly depleting your nest egg, but not before your LE, your life expectancy. And so this usually requires you rethink your thinking. So people would come to my educational sessions to prepare for a retirement so that they would not outlive their money. And I would teach them about these dangers of taxes, inflation, and market volatility, and how they needed to eliminate these dangers, which required that they reposition their assets. So if the bulk of their money was in yet to be taxed IRAs and 401ks invested in the market, I had to get the money out of those IRAs and 401ks and out of the market so that they were immune from the market volatility and could create predictable cash flow at more like 8% to 10% payouts. On every $1 million, they could generate $80,000 a year, maybe even $100,000 a year or more of income without depleting the $1 million nest egg. Whereas if they left it in IRAs or 401ks in the market, they were told to only pull out 4% a year, half that much, and it would slowly deplete their nest egg. So it was a no-brainer, but we had to perform what I call a strategic rollout. Now, this is where you're getting money out of those IRAs or 401ks, but you're not doing a rollover. See, a rollover is like going from the frying pan into the fire, so to speak. That's where people have money in 401ks, and at retirement, they're rolling them over into IRAs. If they don't need the money yet, I think they get duped into continuing to defer, procrastinate, paying tax until they're age 72, and then they're forced to pull out the required minimum distribution, RMD, or else they're going to be penalized 50% on top of the tax, and the government wants that money out and taxed before they die. So that's called an RMD. And many advisors say, well, if you don't need the money, just wait until you're 72 years old and then take out RMDs. That's the worst advice, in my opinion, for most retirees. You're not saving tax. You are compounding it. We developed software years ago that shows the darkness of the night if you do that. If you keep postponing and deferring until you're 72 and then you take out RMDs during the rest of your life and your spouse's lifetime, and then whatever's left in there as it transfers down to your heirs, they have to get it out and taxed within 10 years. People are always flabbergasted, shocked with the amount of tax they end up paying by stringing it out. They're not saving tax, okay? They're actually increasing it. So then I show them a strategic rollout, not a rollover. This is where we're getting money out of those IRAs or 401ks strategically, usually over 5 years. We're getting the taxes over and done with sooner than later because most people believe that taxes in the future will be higher, not lower, not even the same. So why do we want to keep postponing paying tax to some future perceived unknown advantage when we're convinced taxes are going to be higher? That doesn't make sense. Now, some people think I'm talking about a Roth. Now, a Roth IRA or 401k is a step in the right direction. Only about 9% of Americans actually utilize Roths. Still, 91% of Americans are duped into putting money into traditional IRAs or 401ks. But see, they passed the Roth IRA and then later the 401k initially in 1997 because the government was hard up for tax revenue. And they said, hey, you know what? A lot of Americans are getting smart and they're realizing it's better to just get the taxes over and done with sooner than later and then turn on tax-free income down the road. And so it triggered tax revenue for the government because people went, oh, yeah, I'm going to convert my IRAs and 401ks to Roths, and that generates tax revenue. And so the government got a nice windfall, but they did it for them, not so much for you. It was a step in the right direction. Now, on this channel, you may have heard me say that I've never owned an IRA or 401k. I never will. I've never owned a Roth IRA or 401k, and I never will. Why? Because my favorite vehicle, Indexed Universal Life, structured correctly and funded properly, which I deem a LASERFund. LASER is an acronym that stands for Liquid Assets, Safely Earning Returns. That knocks the socks off of Roths. Roths only have two benefits. You fund a Roth with after-tax dollars, but your money accumulates tax-free and you can access the money tax-free. That's it. Now, IUL has had those two benefits now for over 108 years in the Internal Revenue Code, but you have 4 additional benefits with a LASERFund that you don't get with Roths, okay? In a nutshell, there's no restrictions. I can put in, $50,000, $100,000, $300,000 a year. You can't put that much into a Roth. You don't have to put in $300,000. You could put in $30,000, and you could make up the other $270,000 anytime in the future. You cannot do that. If you don't use the room in a given tax year with the Roth, it's over. But I could put in $300,000 if I have a banner year as a business owner, let's say. And if a month later I need to go access $200,000 or $250,000 of that, I can do that out of a LASERFund. There's no penalties with the IRS. I don't have to wait till I'm 59 and a half. With a Roth, you have to wait 5 years or till you're 59 and a half. These are all the strings attached. But see, Roths don't use indexing. Indexing allows me to participate when the market goes up and then not lose when the market goes down. I may not make much of anything when the market crashes 20, 30, or 40%, but I don't lose. And I start making money again the minute the market turns around instead of waiting 3 or 4 years to make back what I lost, like people had to do after the 2008 crash. It took until 2012 just to make back what they lost. Okay. And so indexing is offered with the LASERFund, which is not available with Roths. The last benefit is when I finally die, anything left in my LASERfunds blossoms and transfers tax-free. I'm just about 70 years old as of the recording of this episode, and so if I died in an accident tomorrow, every $1 million that I would have in a portfolio of LASERfunds would blossom to about double that, $2 million, and transfer totally income tax-free to my spouse, my kids, a church, a charity, whoever I want. There's not a Roth around that will do that. Now, people always say, well, how much does that cost? Well, nothing's free, but it doesn't cost me anything. It's being paid for. It's coming along for the ride, being paid for with a minuscule portion of money that would otherwise go out the window in unnecessary tax if I followed the herd and put money into traditional IRAs or 401ks. So you convert to tax-free income by doing a strategic rollout. And so that normally takes 5 years. We've had people who have rolled out $100,000 a year over 5 years, $500,000. That $500,000 in their LASERfunds has doubled every 7.5 years at an average return of 9.6%. $500,000 doubles to $1 million, and then $2 million, and $4 million, and $8 million. Yep. We actually have clients that have $8 million in their LASERfunds, generating $600,000 to $800,000 a year of tax-free income. They went from the highest tax bracket to a 0% tax bracket in 5 years. We do this all the time. We have helped people save $250,000. I'm talking about school teachers. $750,000 for a real estate landlord. $1.2 million for a husband and wife, both physicians. We want to save you unnecessary tax. So that's how you convert to tax-free income. Explore a strategic rollout, not a rollover. Talk to a specialist to help you understand how to do that. Now, if you want to learn more, this is why these books are flying off of our warehouse shelves. I teach advanced continuing education to CPAs and tax attorneys, and when they learn this strategic rollout, they're like, oh my heck, this is incredible, because they're guilty of telling people to defer and take RMDs, and then they realize that is not the best advice. So this is a 300-page book. It's called The LASERFund, How to Diversify and Create the Foundation for a Tax-Free Retirement. It retails for $20 on Amazon. I want to gift you a copy of this for free. You simply go to laserfund.com, LASERfund.com, click on the link below. You contribute a nominal amount towards the shipping and handling. Come on, you got to have some skin in the game. I will cover the rest of that, and I will pay for the book and fire out a hard copy to you. 300 pages. It's actually 2 books in one. This side is about 200 pages, 14 chapters with all the charts and graphs and explanations. If you learn more by stories, you flip it over and read this one. This is about 100 pages, 12 chapters with 62 actual client stories, and there's a chapter in there that talks specifically about strategic rollouts. And I think there's like 5 or 6 stories in that chapter that helps you understand how you could implement this strategy for yourself, okay? And so claim your free copy. There's also options there if you want to listen and learn, watch and learn. You can join us for educational online virtual seminars and webinars. And you can even speak to an IUL specialist to see how these strategies and a strategic rollout may benefit you. And they can create a report to show you an RMD analysis report on how much better off you're going to be and how much you will save in tax over the long run by doing this strategy. So this is about you, your brighter future, and not outliving your money during your golden years.